if that pushes through. Trip Chaudhary joining us on the phone line. He's Managing Director, Equity Research, Global Equities. And Sandip Agarwal, Fund Manager and Co-founder at Sowilo Investment Managers, also joining in on the conversation. Welcome to both of you.
I want Sandip Agarwal's view on this as well. Sandip, you've been listening to the arguments that Trip has made, and he has consistently called for relook at the business models of some of the largest IT companies in India and asking them to stay ahead of the curve. Do you agree with some of the arguments, though? Because the read-through, I think, that everybody has is that financial services is done reasonably well for Accenture, and this federal business is not something that Indian IT is through. So at least for the short term, there appears to be a little bit of resilience for Indian IT companies.
Hi, good morning for having me on the show. So I will just reiterate that, last 10, 12 months, we have been consistently highlighting that Indian IT companies will not see growth for the large names, primarily because, I firmly believe, based on my practical experience also, that there is a 25-30% dip in efforts, and you have to now cover those efforts by, giving more efficiency, which cannot happen overnight. So there is a tough task in the hands of large IT companies. They have become primarily X growth. Now for X growth, what pay ratio and what multiple anyone wants to assign, that is there the fund managers call. I think the stock should not be seen that they have time corrected in last 3 years. There has been no return. That is not a logical argument in my view. Still, they are very expensive. The large caps are expensive on pay ratio. The mid caps are also very expensive on the pay ratio. The small caps do have an advantage in a big way that, all the contracts which were coming before 2019 as $500 million, they fell to $150 million, which benefited the mid caps in 2021-22. Now they have further fallen to, $100, $200, $500,000, $1 million, $2 million. So they will further benefit the small cap. So that is my view for last 1 year. We are not positive on the large names. We are not very positive on the mid names because of they are very expensive. We are very positive on some of the small names, but they are very, very small and may not make much sense to the larger funds and others. So that is the way we look at the sector. I don't think that Indian IT company will lose its presence or its anything. That is not going to happen in my opinion, because I have seen this industry for last 30 years. I have run tech company, I have met clients, and the challenge is that we own 96% of the global sourcing market if you exclude BPO from the numerator and denominator, and that the second best provider of services is more expensive than what we charge to the global players. So I am not so negative. I think Accenture numbers suggest one thing clearly, that it is a X growth sector. So I don't read more than that, and we will see similar commentary and numbers from Indian IT companies, large caps especially.
Okay, so Sandip, then the long and short of it, are you expecting a negative impact on Indian IT companies today? Number one. And number two, do you think that it's an opportunity, or there is any case to be made for buying into Indian IT right now when the trend is so bearish? Or is it a clear stay away?
So see, large cap Indian IT company, they are replacing some of the FMCG names because they are also now giving same growth, similar margins, and at half the multiple. So, some people may buy them as quasi cash or replacing the FMCG in their basket. But otherwise, I think, because they have become X growth, so they can only be, defensives in some portfolios, but they cannot be something which will make money for you in a big way. Some dividend funds will definitely buy them because the dividend yields are now consistently going up. But let me tell you that, consistent announcement from the US, some or other announcement not related to even IT, that keeps things in a risk. And because of that, people are not buying the stocks. And I believe that, these prices which are there right now, they are very, very good prices. But still, if a sector there is no growth, then, obviously, why should one buy? We buy shares for growth. We buy companies for growth. So if there is 5-4% growth which is going to come, why should I invest? So I will avoid large names. I will avoid mid names, but I am selectively looking at some of the small names. We run a PMS, so very tough to disclose.
Strong views from both our guests, and Sandip and Trip. Thank you so much for expressing them. Lovely to have both of your views on board. Viewers, it does seem that it is not going to be a sunny side up for the IT stocks, at least this morning.